Good afternoon, everyone, and thank you for joining us for today's webinar. I'm Chriselle Anderson, the MSBA Educational Program Assistant, and we'd like to thank the MSBA Taxation Law Section and the attorneys at Frost Law for joining us. Presenting with us again today, we have Rebecca Shepard and Peter Haikobu with Finally Forgiveness, the Payroll Protection Program and Loan Forgiveness. Please email your questions to me at chriselle@msba.org, and the presenters will try and answer as many as they can with the time allotted. And now I'm turning it over to Rebecca and Peter.
All right, thanks so much for joining us again. Oh, there we go. So we've been waiting a really long time for forgiveness guidance, and on May 15th, the SBA issued the forgiveness loan application, which Peter and I got really excited. It was a Friday night. We're like, this is awesome. Let's do another presentation. We can talk about this. And then just to make things a little better, on Friday before Memorial Day weekend, the SBA decided to drop some additional guidance. So these slides were prepared without that. We've added a few tidbits along the way, but we'll mostly kind of discuss that in addition to the slides. So it's good that you're here and not just looking at the material as we go through. Again, Peter and I are mainly tax controversy attorneys. We've been studying the PPP program quite a bit. And as far as what you're able to apply for and what's going to be considered forgiveness, and really what everyone wants to know is, how to maximize that forgiveness. So if you want to go to the next slide, we can go through the PPP loan application, what you're able to apply for, a recap on the plan, and then go into the forgiveness side. So again, we've said this before, but just to kind of focus on, there's still $1 billion, I think, available in the program. So if you have not applied, do it. There's no reason you shouldn't. If you're having trouble with your bank, I've heard SunTrust and Bank of America specifically, but other banks as well are being really difficult. Your M&T, where they wouldn't even allow people to come apply for the second round. There are other third parties that you can apply through, Cabbage, PayPal, and other lenders. If you're having a problem, you can reach out to either me or Peter, directly afterwards, and we can help get you somewhere to apply, because that's the only way you're going to really be able to maximize your forgiveness is if you get the money first. So the maximum loan amount of the Paycheck Protection Program for each borrower will be the lesser of either $10 million or the average total monthly payments for payroll costs incurred during the 1-year period prior to the loan date multiplied by 2.5, plus the outstanding amounts of any emergency injury disaster loan obtained on or after January 31st to be refinanced under this loan. Payment deferral for the first 6 months, including interest, principal, and fees. Interest will continue to accrue during that deferral, and the interest rate on these loans is 1%. Obviously, that's still a really good deal, and people should still be clamoring to get these loans if they're going to be able to get a 1% loan. But that's not the best part. People want to get these loans ultimately forgiven, and that's why you are all here. We'll go to the next slide. Thank you. So payroll costs. What does that mean? The sum of payments of any compensation with respect to an employee is that salary, wage, commission, or similar compensation, payment of cash, tip, or equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment required for the provisions of group healthcare benefits, including insurance premiums, payment of any retirement benefit, and that is huge. That is something that you can really look at. We'll get into a little bit later, or payment of state or local tax assessed on the compensation of employees, and the sum of payments of any compensation to or income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from self-employment or similar compensation that is an amount that is not more than $100,000 in a year prorated for the covered period. And the next slide. The compensation of an individual employee in excess of an annual salary is not included. Also not included is no credit received for the employer portion of your payroll taxes. In the CARES Act, they discussed the employee portion not being forgiven as well, but they've changed that through additional guidance. So any compensation of an employee whose principal place of residence is outside the United States. And then you can't double dip. You can't get money through the FFCRA or other paid wage replacement and then also still try to get that money forgiven. You can only get it the same wages forgiven once. I'm going to go to the next slide. All right, limitations on loans. So PPP provisions that can reduce or eliminate the amount of forgiveness. So spending less than 75% of the PPP loan on payroll costs, and we'll get into that a little bit later as far as like what our interpretation of that means. Reducing the full-time equivalent employees, the FTE, and we'll definitely be spending time on that. Reducing employee compensation by more than 25% during the base period. Again, payroll costs do not include compensation exceeding $100,000 annually, and that's cash compensation. So you still are able to do retirement and healthcare and things like that. And again, the sick or family leave credited already, and payments to an independent contractor. That's a typo. See if you're paying attention. Next slide, please. So there's new guidance. On May 15th, the SBA issued release number 20-41 announcing the PPP loan forgiveness application and corresponding instructions. If you haven't looked at that yet, I definitely suggest that you do to try to figure out when your periods are going to go and how kind of all of this is going to play out and how the numbers will work. To the next slide, please. So this is the application. This is what it looks like. And I believe, Peter, correct me if I'm wrong, this is a sample provided by the SBA. There's a possibility that banks are going to change that a little bit.
Yeah, it says that the banks can use their own form.
So take that with a grain of salt, but most likely they'll look like something like this. The banks are going to want these things to go through as quickly and easily as possible. It's really beneficial for them. So something to keep in mind. The next page. So key highlights or takeaways from the May 15th guidance or May 15th application. Covered rent obligations. Borrowers are now assured that covered rent obligations, non-payroll costs, include business rent or lease payments. So before we thought that, cars and things like that may not be included. But now we believe that it says specifically lease payments for personal property are allowed as long as it was in effect before February 15th of 2020. So that is a pretty big difference from where we were before. Go to the next slide. So another thing that they've changed is the 8-week covered period. I won't say changed. Another thing they clarified is that the 8-week cover period of a PPP loan is specifically defined as 56 days. So depending on when your cover period is, you might get an extra day out of that. Maybe that's useful, maybe it's not. We'll come to see. And we'll get into this, but if you get your funds on April 20th is going to be your first day. If you keep this covered period, and then your last day will be 56 days later, which is June 14th. Next slide. However, if you have biweekly payroll or more frequent, so not everyone gets to use this alternate covered period, but if you have a frequent payroll, so every 2 weeks or every week, you may choose to calculate your payroll costs using an alternate payroll covered period, which means that if you got your funds on April 3rd and you had a payroll for April 2nd and your next payroll isn't for 13 days later, you can change your covered period to start with that payroll. And that is going to come into play specifically. You're going to want to think about that for FTE purposes and other types of long-term thinking, not necessarily just that payroll cost. The reason SBA did this is just to make it easier for people. In the beginning, Peter and I were like, and you'll run a special payroll that'll go till noon of Friday, and we got really into it. We apparently don't need to go that into the weeds about it. They're saying either take the regular 8-week period, do an alternate payroll period, whatever makes sense for your business, as long as you have that frequent payroll schedule. So again, if you got your PPP loan proceeds on Monday, April 20th, and the first day of, were you gonna say something?
I was, but I was going to wait till you were finished.
Finished. If the borrower received his PPP loan proceeds on Monday, April 20th, and the first day of its first pay period following the PPP loan disbursement is Sunday, April 26th. The first day of the alternate payroll covered period is April 26th, and the last day of the alternative payroll covered period is Saturday, June 20th. So it gives you some more time.
And just to clarify, because you've got to start thinking about payroll costs versus non-payroll costs. So the APCP only applies to payroll costs. It doesn't apply to non-payroll costs. So there's some more rules coming up here with respect to incurred versus paid and that kind of stuff. But in the first instance, just make sure you understand that this APCP only applies to the payroll cost, which is cash compensation, healthcare benefits, and retirement.
Next slide, please. So payroll costs incurred, payroll costs which are incurred but have not been paid during the borrower's last pay period are eligible for forgiveness if the payroll costs were paid on or before the next regular payroll date. So if you don't take the alternate covered period, if they were incurred but not paid during the borrower's last pay period, you can still get them to be forgiven. So again, in the beginning, it may have seemed like SBA was trying to do like a gotcha, like, oh, well, you got this to be covered and not that. It seems like they're being really, I'll say flexible with all of this to try to make sure that you're getting things that are incurred and not paid. So if you have a regular covered period and your payroll ended on April 18th and you're paying people on April 20th, April 18th is in your period and April 20th is not, you're allowed to do that through the next paycheck and have it still count towards your forgiveness. That's an important takeaway.
And this just turned everything on its head. I mean, the text of the CARES Act said incurred and paid, and now it's incurred or paid. So this is a major change.
And a good one. A change for the better. All right, next slide. So one new piece that came out on May 22nd, which is bad news possibly for S-Corp owners, is that owner employees are limited for their own compensation to either 8/52 of 2019 compensation or $15,385, whichever is lower. This is brand new information. This has not come out before. On April 14th, there was guidance that was issued. I don't know if you all were there then, but Peter and I did a presentation on it, and the guidance came out like 10 minutes later. So at least this time we got it ahead of time. But that guidance said specifically for sole proprietors, the compensation was limited to 8/52 of 2019 compensation. And we thought that was a big distinction between an S-Corp employee, owner employee, and a sole proprietor. This is bad news for the S-Corp employee who did not take wages like they were supposed to take wages, who maybe took a reasonable salary of $50,000 and had K-1 income of $100,000. They are going to be negatively impacted with this rule. So something to pay attention to for the sole proprietors out there or the S-Corp owners. Next slide. Employer contributions. So during the covered period, contributions by employers to employee health insurance, including employer contributions to a self-insured employer-sponsored group health plan, as well as to employee retirement plans, are forgivable. Any pre-tax or after-tax contributions are not forgivable. So we've had a lot of questions in the last 2 weeks. What about AFLAC? What about long-term care insurance? Well, isn't disability insurance just like health insurance? It's not health insurance, and it's not going to count, at least from what we've read. So something to keep in mind. Go to the next slide. So new guidance issued on Friday. Retirement contributions for all employees are not qualified in any way. That is something to think about. So I had originally thought, not everyone, but I had thought that It was going to be, if you had given $5,000 to your employee for their retirement in 19, you needed to do the same thing in 20. You couldn't increase their retirement using PPP funds. But it doesn't say that. I thought it was going to say that, and it didn't. So that's something to keep in mind. Now, with everything like this, I really strongly encourage you to either hire an attorney, talk to your CPA about what the tax effect of all this will be. You could start a retirement plan for your employees. This could be a great thing. This could be a good beginning. It doesn't say it has to be in effect at all. But, and we'll get into this, the tax treatment of all of this forgivable loan proceeds is going to impact your business. And, you should be very thoughtful in how you plan to get all this taken care of. One other item of note for May 22nd, I know some CPAs who are more conservative than Peter and I were saying you can't bonus your people. SBA says you can. If you are under $100,000, you can bonus your people, give them hazard pay. You can get them up to that $15,385 employee number, unless you're an owner employee, in which case you're out of luck, as I said earlier. So it does feel like that, it's like a little bit discriminatory because you can bonus out every other employee but the owner. Next slide. Business utility payments are defined as business payments for a service for the distribution of electricity, gas, water, transportation, telephone, or internet access for which service began before February 15, 2020. So the new guidance issued on May 22nd permits utility costs that are incurred during the cover period and paid afterwards. And you can prorate these expenses. So if you got a bill, so your covered period ends May 31st, and you have a bill for your electric bill due June 15th, probably not how quickly that works, but assuming, and your bill goes through June 11th, you can prorate that May 31st utility cost in your forgiveness amount. Transportation utility payments. So a transportation utility has been interpreted, however you're looking at this slide, to mean fuel costs for business vehicles. I know no one's driving anywhere, but if you are, this is a good thing. Maybe it's a better opportunity for people who've gotten the funds later. And that's something that they'll be able to do once kind of everything is opening back up. And go to the next slide. And here we are. Peter's turn.
Yep. So these next couple of slides are going to deal with the FTE and wage reduction issues. I was doing a webinar last week. Really, it was non-attorneys, but freaked some people out. And so I just want to start by making sure that we understand, what's going on here. So there's two ways that the text of the CARES Act and the regulations have said you can reduce your loan forgiveness, and that's through a reduction in FTE or a reduction in the wages. We speculated previously that there may be some sort of safe harbor provision in 11065 of the CARES Act. How that worked and what that was going to do for folks was not known. So now we have information about safe harbor. But safe harbor is not the path that you have to take. So there's really two ways here to avoid a reduction in your loan forgiveness. One is to comply with the safe harbor that has come out. And the second way is to just not have reduced your FTE or wages. So when I was doing this webinar last week, I was talking about safe harbor, and these folks were saying, well, there's no way I can meet the safe harbor. What have I done here? I've gotten myself into a mess. Don't focus just on the safe harbor. You can get to where you need to be just through the normal stuff. So just as a reminder, the ordinary rule for the FTEs, right? You're comparing your 8-week period, your 56 days. And if you have elected to use the APCP, the alternate payroll covered period, you use that 8 weeks. And for full-time equivalent, you are looking back and you're choosing one of two reference periods, the first of which is February 15th to June 30th of 2019. And the second would be the first 2 months of 2020. So that's just the normal rule. Wages, the wage reduction, you are again looking at either the covered period or the alternate payroll covered period and comparing, and this is something that we learned, you are necessarily now comparing Q1 of 2020. I think it would have been Q1 of 2020 for most folks anyway, but now the guidance that's come out has clarified that. One very important point, and that's what this slide is about, is that if you are an owner, employee, independent contractor, self-employed individual, or partner, you are not counted as part of in the FTE comps. So immediately when I read this, I'm thinking about, family-owned restaurants or something like that, where they've opened back up or stayed open, but haven't brought all their folks back. You're not going to be able to include yourself as the owner in that situation. Bill, next slide. So the other big thing that we learned and is the denominator here is going to be 40 hours. So there was some idea that perhaps they were going to use the 4980H comp for ACA because a lot of the payroll companies are already tracking that. That's not what's going on here. They've come out, they specifically said we considered that, but that's not what's happening. So they're going to use the 40 hours. This is a weekly average, so that's also new. In the CARES Act, it talks about a monthly average. They pull that back to a weekly. So, you're going through and you're thinking about, well, on average, how much does this person work during these reference period or cover period, coming up with that weekly average. And again, the denominator is 40. And again, I think it's important to note that there is a maximum of 1. So if somebody works 45 hours a week, you're only going to get to 1. Thank you, Bill. Next one is there's a simplified method here, which will be helpful in situations where you had more part-time work in the reference period than in the covered period. And that is that you can use 0.5 for any employee who works less than full-time. So that'll help make that comp a little bit easier. Next slide. Okay, let's see. In order to evaluate whether the borrower's FTE levels qualify for full forgiveness. Okay, so this is, and this is not for the first quarter 2020 is specifically for salary. The reference periods, again, for FTE, and this is not in safe harbor land, right? This is the normal comp, is either February 15th to June 30th of 2019 or the first 2 months of 2020. Next slide. So there are some, and again, I just want to clarify, this is not in safe harbor. I mean, it works in safe harbor, but this applies to everything. So there are some exceptions to a reduction to FTE. So the first is a good faith written offer that is rejected by the employee to come back to work, and that is documented. This came out a couple weeks ago in one of the FAQs. It was confirmed in the guidance that was dropped on Friday. The additional exceptions, and I'll talk a little bit more about that in a minute, but the additional exceptions are firing an employee for cause, a voluntary resignation, or if the employee specifically asked for a reduction in hours. So the big one here, first of all, you're going to have to document all of these, but one of the big ones here is the first one. So what is a written offer? What does a good faith offer mean? And so it's specifically defined in the IFR to say, well, it has to be at the same hours and at the same rate. And it goes further and it says, based on the pay period immediately preceding the termination. The second really big thing here is that you've got to tell the state that you offered their job back and they didn't take it. So we don't know, they've promised additional guidance on what this looks like, but what we know so far is that within 30 days, you need to notify the unemployment insurance division for the state that this has happened. And again, they've offered or they've suggested that there'll be additional guidance, but that's all we know so far. So you've got to tell what your employees are doing. Bill, next slide. One interesting thing on that last slide is it's not clear if there's any effect. This says if the position ultimately isn't filled with respect to fired for cause, resigned, or a reduction in hours. It's not clear exactly how it would work. If someone ultimately accepts the position, maybe they accept the position in week 8 of the 8-week covered period, how it would work with weeks 1 through 7. So, be mindful of that. It shouldn't hurt you, but it's not, totally clear. So this we've covered. You can go to the next one, Bill. All right, so this is the first safe harbor. So the FTE safe harbor is really a two-part one. So point 1 here is I think a condition precedent. So you have to have a reduction in FTE levels between February 15th of 20 and April 26th of 20 to get to the next spot. So if you were an employer who said, I'm going to do right by my people, I'm not going to cut hours, I'm not going to furlough anybody, and you kept them at the same level during that reference period, I don't think you get to step 2, or at least that would be the concern, that you don't get to step 2. But step 2, if you did have that reduction, it's saying if you restore those levels, that FTE level, no later than June 30th, but there's language in there that says if you get to it before June 30th, that's okay. It doesn't necessarily say that you have to have it on June 30th. So I think that's an important distinction. It's, I think, an open question as to what would happen if you achieved that level and then dropped and you weren't by June 30th, but the language out there says or before. And you're looking back to see, have I restored it to the pay period that includes February 15th? And if the answer is yes, then you've achieved that safe harbor and you shouldn't have any reduction. So that's a big one. And we'll see later, but you should do the FTE comp first before you do anything else. Next slide, Bill. So the wage reduction is similar. It is using the February 15th to April 26th reference period. And again, looking at June 30th, that if you have, eliminated the reduction. The interesting thing that came out in the regulations on Friday was that if you have a reduction based on FTE, you're not going to be doubly penalized. So any employee that is part of the problem on the FTE comp, you're not required to do a wage reduction analysis for that particular employee. So that's why you want to do the FTE first, and then you don't get into the wage reduction analysis. The wage reduction, again, well, no, we don't need to get into that. Next slide. So how to apply, there's a particular form that has come out. It specifically says that banks are allowed to build their own platforms and use their own forms. So like many of them did, I would anticipate these banks are working on building this out now. And then I think, Bill, the next slides are just what the form looks like. So we don't need to go through those. I suspect, and we sort of planned for quite a few questions on this. So hopefully those have been coming in. But that, I think, is the end of our content. Yeah, I don't have anything more. Rebecca, do you?
No, that's it as far as content. One thing that we don't have a slide for, but just something to kind of keep in mind, again, why it's good to kind of think through this in a long-term way, because there's going to be a tax impact to this forgiveness money, most likely. I know people are challenging it, but as of right now, you're not going to be able to take this as an expense. And so it could really increase your business income, for 2020. So that's something to think about. Another item to think about is you can defer your payroll tax payments while you're waiting to determine whether or not you've been forgiven. So you can't, there's all these different federal programs. And I think, I don't remember, it was this one or another one. Peter and I have done a few of these where, he's talked about like what programs kind of like play nice with the PPP, and the payroll tax deferment program doesn't play nice with PPP. You can't get items forgiven and defer your payroll tax payments. However, you can wait until your loan has been forgiven. You can defer your payroll tax and then pay it once you've gotten notification that your loan has been forgiven. And that could be like 6 months. So you could, unless your bank says differently, and I don't believe there's language that says it must be done at a certain date. The only dates that I see are that when you apply, your lender is 60 days and SBA has 90 days. So if you waited 60 days or so to apply for forgiveness, and then then the bank takes 60 days. Now the bank is really incentivized to have this done sooner, obviously, because they want to get that money paid back. But so maybe they wouldn't take the full 60, and then SBA takes 90 before they pay. It could give you this added benefit of not having to pay penalties on your payroll tax while you're trying to, have your business operate under these circumstances where we still don't really know the full impact of everything because we're still opening up slowly. Courts are still not open. I'm sure that is impacting all of you. When they open, it's not going to be normal. There isn't going to be a normal timeline as far as when your hearing is going to be scheduled and things like that. Emergencies are going to go first. I think jury trials aren't scheduled to be done until October. Is that what you saw as well, Peter? So I think if you're a litigator, this is, the challenging economic times aren't over June 30th. So it's something to think about as far as how you want to push this money out. Now, again, some people are going to want every dollar forgiven possible, and some people are going to be okay with taking a 1% loan and paying their payroll costs after that 8-week period. It's something to think about. What makes the most sense for you and your business? A lot of people heard the word forgiveness and immediately keyed into that, but maybe that's not the best call for your business, and it's something that you really should kind of go through with an advisor, whether it's an attorney or an accountant. Other things that I don't think we touched on this time that could just be like strategically something to think about. If you have a 1099 contractor that works for you, that's really probably should be an employee, you can reclassify them. And that's something to think about. That's something that, either Peter or I could help you with. That's something we do in our everyday practice as far as IRS audits and things like that. There's also a program through the IRS, a voluntary disclosure program when you're calculating to turn people over from a 1099 to a W-2. And it's an extremely forgiving program. You're paying like pennies on the dollar for something that would have been owed. So if it's something you were thinking about doing anyway, this would be a decent time to do it. Somebody who comes in where you're, regulating their schedule, you're in charge of what they're working on. They can't come and go as they please. They're probably your employee, and it's something that would be best to classify them as an employee, and then you might be able to get their wages forgiven. You're not locked into something that happened last year. And then is there anything else that you can think of just before we get into the questions?
No, I think that was good. That was.
Okay, so we have some questions now. Hopefully we'll get more later. And then Peter and I can kind of go through questions that our employees or our clients have asked us as well. The first question is, I realize that there's an issue of payments to employees is less during the covered period than during the start of 2020. So one thing to also keep in mind is if you make over $100,000 a year, you have employees, you can reduce their wages and it won't impact your forgiveness amount. Not saying that you should reduce their wages, but if you wanted to and that was your business decision, it's not going to hurt you in the forgiveness realm. And for people who make under $100,000 a year, you can still reduce their wages. It's just you can't reduce them more than 25%. So there's some wiggle room there. It's not like a die hard if they made $18 an hour that they can't make $17 an hour. We're in the middle of some economic turmoil, something to think about. But the question is there any issue if payments to employees is substantially more over the covered period? No. In fact, SBA said hazard pay, bonus pay, we're totally fine with it. The purpose of this law is to specifically put money in the hands of your employees. So that's something, again, except if you're an S Corp and you're an owner, in which case you are out of luck. But for all of the other employees that work for you, you're able to bump them up if you want to. Just remember, again, and since we didn't actually get into it, something to think about, the IRS has come out with guidance saying, well, actually, so the CARES Act said specifically there was not going to be a cancellation of debt treatment for this forgiveness amount. They didn't want there to be a tax problem for you taking this money and paying your people because it would disincentivize a business that is opening solely for the purpose of paying their people. There's some businesses like law firms that are able to still operate, but restaurants that are on 20% capacity, it's really much more difficult for them. And so they didn't want there to be this negative tax treatment. The IRS came out and said, sure, we won't count it as cancellation of debt income. We're just not going to let you treat it as an expense. Well, that's a huge problem for a lot of people. And so it's something to take into consideration of how you want to go forward, whether you want to pursue forgiveness or whether you want this to be a 1% loan and be able to take that, the wages and your rent and all the other stuff as an expense. So the next question I will give over to Peter.
Couple quick points on that.
Yeah.
So first point, we started talking about wage reduction. One new thing that came out in the regulations from Friday is that the employees that you hired in 2020 are now specifically considered for the 25% reduction. So previously, what the guidance said was the universe of people that you're looking at is employees who at no point in 2019 earned an amount during a pay period that annualized would be 100,000. So I think that same principle now moves to 2020. But interestingly, and this is really in the weeds, but maybe it'll help somebody, someone that you perhaps bonus in amount that could, annualized could be more than $100,000 is now not considered in that. And they double down on it. It's, any pay period is what they're looking at. The second point that I think is important and addressed at least twice in the guidance that came out on Friday is that these payments, the government is contemplating that you may be in a situation where you are paying someone to sit at home on their couch and not be working, not be actively working. So we've had many clients that have said, what am I supposed to do? Pay this person to do nothing. And if you want to avoid the reduction in forgiveness, the answer is yes. Or you figure out other ways to, spend this for the approved payroll cost and the approved non-payroll.
So we're encouraging our people to be creative. If there's a project that you've wanted to be done for your business for a long time and you haven't had the ability or the time or anything like that to do it, this might be the time to hire someone to tackle that bookkeeping project, or maybe to up your marketing with SEO or something like that that's helping your business ongoing operations, going to increase your bottom line that you wouldn't have done previously. But again, and just keep in mind that by paying somebody to do nothing, you're also going to have a negative tax treatment because of that. And you're paying the employer portion of payroll tax. So there's a couple negatives with that, other than just the fact that, like, I think everyone's gut doesn't really like paying somebody to watch, Bravo or whatever. Peter's favorite channel. All right, next question. If you get a Maryland grant, which seems by definition is not a loan, will that prevent the PPP from being forgiven? That's for you.
No, I've not seen anything where the PPP doesn't play nice with state programs, so you should be fine.
Next one is there any opinion resolution on whether payroll disbursements will be deductible? I think you mean being able to take it as a business expense, and there is, it's just we don't really like it. And people are going to challenge it. CPAs are really upset. We were at a webinar last week where two very respected, CPA attorneys that we were listening to present were talking about how much they were going to challenge this rule. So fingers crossed it gets fixed, but as of right now, prepare that you're paying taxes on that. So that's something that's really, it's a dagger for people who are excited about this program.
We think there may be something working its way through Congress, but just as of yet, it's not there.
Yeah, so until that happens. And there is also with the HEROES Act, just real quick, I know they put that through. It hasn't been voted on yet by the Senate, but part of that relief package changes the terms of the loan from 2 years to 5 years, which would be beneficial for people who choose to not go the forgiveness route or aren't able to get the fully forgiven and have a loan, stretching out that process. All right. Does covered rent include rent paid to related parties? Example, a principal of the tenant. That's to you.
I'm not sure what it means. A principal of the tenant.
I would guess not. You need a lease. The lease needs to be in effect. One interesting thing I saw this weekend, which I will talk about as far as somebody else's idea, but I would not take it as, I would take it with a grain of salt, is that it said specifically the lease had to be in effect by February 15th, but it doesn't talk about the amount. And so sometimes people have leases that incorporate other anticipated payments like insurance or things like that. And there is at least a faction of people that believe that means that if the lease is in effect, you can kind of alter the amount and have that still be forgiven. Something to think about, but I would definitely do more research or have somebody do more research before amending a lease.
One thing that is good to add, I think the last webinar we did with MSBA had, well, I guess we haven't done the self-employed. So there's language in a prior IFR that says, the self-employed independent contractor sole prop can only claim non-payroll costs that were included or could have been included on the 2019 return. So in effect, moving the goalpost back to say this needed to be in effect by January 1st or December 31st of 19. What the loan forgiveness application and these regulations that came out on Friday seem to suggest is that they've now moved that back from calendar year 19, and they've said, okay, for everybody, as long as this expense was in effect, it was agreed to by February 15th, that will treat everyone the same. So a little bit of movement on that as well.
And that's great. So make sure it's like more clear for everyone and to try to treat people the same way. All right. Peter, can PPP funds be used for back pay of employees who are laid off due to lack of other funds?
I don't see anything that's come out that says you can't. And I think that...
I don't see why you would, though. I would rather use it for people going forward.
if you're trying to maximize your payroll cost, I think it's something to consider. But yeah.
I would just be careful if they're on unemployment. I'm not an employment attorney. If they're on unemployment and they get back pay, I think that counts against unemployment. If it's the same, I would just make sure you look into all the ramifications of doing something like that.
Yeah, there may be more. I don't know. We haven't seen back pay, but what we do know from the regulations is bonuses and hazard pay is good. So,
So it might be easier just to bonus them out and bring them back rather than trying to pay back pay, in which case, if they have to report it somewhere, it may not be as beneficial. As I understand, PPP will not forgive the amount of money that is withheld for taxes out of each check. Is that true? So that is incorrect. It was in the language of the CARES Act, Title 21, 22, and 25. One of them like a railroad provision. Not a lot of people have apply to here. But in the CARES Act, they said that only net payroll is going to be forgiven. And the first guidance that came out that actually employee portion of payroll taxes are able to be forgiven. So that's been around for a while. That makes it a lot easier. Your employer portion is not forgivable. And that is something that everyone should take in consideration if they're paying somebody to sit on their couch, whether you want to go into debt for that. In addition to the tax treatment, you're also going to have to pay these employer portion of the taxes.
So I think just to clarify,
yeah.
What all that means is your gross pay to your employee is what you're claiming forgiveness on. So there is no netting. It's your gross pay. Correct.
But just to throw another log on fire, if you're making $100,000 a year, that's your $100,000 is your payroll compensation, but health and retirement go on top of that. So it won't impact that as far as forgiveness goes. Can pay dates be changed to cover for companies that pay 2 times a month to get full advantage of all days? No, I wouldn't. I would keep your pay dates the same, but that's the whole incurred or paid. You should be able to still work it out in the same way. It's just you're not able to use that alternative payroll covered period. If you need to do a bonus payroll, you could certainly do that, but I wouldn't go moving everything around, if that makes sense. Do you have anything to add there?
I don't think it's necessary. I mean, I think they've really liberally applied some of this stuff so that you're able to grab as much as you can. Because either way, it's always going to be 56 days. The language in there, and there's a lot of explanatory language, but they basically draw the line between biweekly or two times a month. They're basically just saying we think biweekly or more frequently is okay, because if we do it that way, we're not pushing this out so much and having to wait and all that kind of stuff. So I think you'll probably be okay.
Okay, I have a question regarding retirement benefits. Can you take your 401k firm contribution from prior year as a payroll cost in full? There's no guidance for retirement benefits. Can you gain forgiveness for payroll that is above 40 hours per week, i.e. overtime? So retirement, if you typically pay a year behind, so you're making your 2019 contributions now, you can do that. You can fund it. You have to fund it for. So what I was telling people prior to Friday is that look at what you gave for 2019, divide that by 52, multiply by 8, and that's what you're able to do. I don't think that's the case anymore. I think you can bump it up if you want. Just know that it's not going to be considered an expense. So it's good for your employees. It may not be as good for you. But if you're an owner employee, you can do the same. And really, that's one area where they just haven't talked about it all, as far as owner employees being able to add quite a bit to their retirement plans. Can you gain forgiveness for payroll that is above 40-hour work week, i.e. overtime? Yes. I think the question doesn't talk about FTEs, in which case FTEs, like I work more than 40 hours a week, my employer only gets one for me. But if my income is more than that, then if you have a secretary who works 45 hours a week, 5 hours of that is overtime, that's all their compensation. So yes, all of that is eligible to be forgiven. And in fact, if they worked those many hours prior to the pandemic, you're going to need to get their compensation up that high anyway. Otherwise, it could be considered more than 25% reduction in their compensation. All right, Peter. We applied for an EIDL before we applied for the PPP. The time we applied for the EIDL, the PPP had not been created yet. The EIDL loan documents say you have to turn over the SBA funds you receive from any other government program. Seemingly, this includes the PPP. Does getting a PPP disqualify you from borrowing funds under the SBA's EIDL?
No. The only way that PPP interacts with EIDL, I believe, and Rebecca, jump in here if you have other, that you wouldn't get forgiveness. So to the extent you received a grant, and remember it was $1,000 per employee, or I guess if you were lucky, some folks got the initial 10,000 that was promised, but it potentially will reduce your PPP forgiveness by the amount of the grant that you aren't required to repay. But otherwise, you're allowed to have both. You cannot use them for the same purposes. That may be an important distinction. But other than that, if you're using payroll or you're using PPP on payroll and you're using your EIDL on something else, that's fine.
Yeah, I think that's the main point, is that you can't use them for the same funds. And that's kind of the main takeaway from all of these programs, is you can't double dip. You can't because you could really get payroll costs repaid like 5 different ways right now through Congress. So make sure that you're doing it properly. All right, next question. If a company runs payroll twice monthly and the PPP was received on April 20th, can the beginning of the alternative payroll covered period be April 30th? So if you run it twice monthly, you're not able to do that. I think we've answered that question previously, but shoot me or shoot us a message if our previous explanation didn't cover it. Bi-weekly or more frequent is when you can change that covered period. Otherwise, you're stuck with when you got the funds, but it's incurred or paid. So with payroll, that whole period where you're working and they haven't gotten a paycheck yet, you're still able to include that in that 56 days. So it shouldn't make a difference. It just makes it more annoying, frankly. Are C Corp owner employees treated as an owner of a regular employee?
I read it as a regular employee. I didn't see where they made any distinction for C Corp owners.
So you don't think
I guess I don't know. I don't know. When I read owner employee, I read S Corp. I guess it could be read in a similar way for C Corp.
I hope they give more guidance on this. I don't think it's clear. I think you can interpret it both ways. If you're a C Corp owner and you made very little money last year, I would be thinking of other ways to kind of amp up your forgiveness. And then hopefully they'll issue more guidance and it'll be more clear. But the way I read it wasn't super clear. Are people related to an owner treated as an owner employee for limitations on payroll and not being included as an FTE? For example, if a spouse works in the business, does the same limitation apply to him or her? I don't believe so. Do you believe so?
I agree. There's no distinction, and I'm sort of surprised that they didn't address family members or related parties, but it's not in the guidance that's come out.
Speaking of related parties, can you explain, if you have 6 businesses, what that means?
Yeah, so this was really big. The 850 seconds or 15,385 applies across all businesses. So, if you are an owner of multiple businesses and you used your salary to get an increased PPP loan, you're going to be capped at the 850 seconds or the 15,385, which is the prorated $100,000 a year. So that was really big. That came out in the Friday guidance.
The SBA does not care for my weekends. The next question is, what is 850 seconds of 2019 compensation? So I apologize. Peter and I are pretty much in the weeds with this stuff, and so we kind of take certain things for granted. So if that wasn't explained, I'm sorry. But essentially, instead of saying you can pay yourself for 2 months, the PPP states that you get 8 weeks of expenses that are forgiven. And so you take your total 2019 income, and let's say it's $100,000. You divide that by 52 weeks, which is 52 weeks in a year, and then you multiply that by 8, and that's your total. So when people were applying, they applied for the loan on your monthly payroll, and then multiplied that by 2.5. And then when you're talking about forgiveness, you're talking about weeks instead of months. So you're losing a few days there, the way calendars work, but it should be pretty clear. If you're a sole proprietor, you're taking your line 31, dividing by 52, multiplying by 8. All right, Peter, payment of state and local taxes are forgiven. Please confirm.
Yeah, but what does this really mean? I mean, for the most part, it's your state unemployment insurance contribution. In Maryland, we only pay on the first $8,500 in wages. So I think for a lot of folks, you'll have already maxed out that contribution. The paid or incurred language from the application and the Friday guidance, in contrast to the text, helps us, I think, if you had any new hires in Q2, because you're not actually making those deposits until July 31st. And so, but if it's incurred, you can add that back in, but it's really effectively only talking about the state unemployment insurance.
All right, what if your business is seasonal, only having employees from June to August? How is forgiveness calculated? I guess it depends on when you get your loan. It's going to be calculated the same way. I hope you waited a little bit to get it like now, if your business is seasonal, versus getting it in that first beginning. It's going to be much more beneficial, obviously, now than it was, April 17th.
Yeah, so just quickly, there is, and feel free to contact us offline. There are specific things for seasonal employers. They changed the reference period. You can choose, I think, any consecutive 12-week period for your look back for your FTE comp. I think it's something along those lines. It's a period between May and September, something like that. But if you want to reach out offline, we can point you in the right direction.
All right. Can you gain forgiveness or payroll that is above 40 hours a week, i.e. overtime? I think we've answered that question as yes, as long as you're not highly compensated. You can use an owner employee's wages up to the limit for forgiveness, but not use the owner employees in the FTE calculation. Correct. So as Peter was saying, I have a client who's a restaurant. He works 100 hours a week and has been slow to bring people back because they have, a 5,000 square foot space, and now they're just doing carry out. You just don't need nearly as many people, and to not be able to count him as a full-time employee is really going to be difficult. That's troublesome. So that's frustrating for people. And again, and I know we've kind of hit it at this point a few times, but the owner employee compensation is going to be limited to the lesser of either 15,385 or the 2019 income, 850 seconds of that. Why does that not apply to S Corp owner wages? Wages increased during covered period. Great question. Write your senator. I have no idea. It does feel unfair, especially because a lot of people. So, Peter and I are tax attorneys. we have a lot of people who are trying to reduce their tax, liability throughout the year. So a lot of people take a reasonable salary and then take a decent K-1. That really did not benefit you here. If you're taking most of your compensation through a K-1 or a lot of your compensation through a K-1, you're not going to be able to get fully compensated because you're not paying self-employment tax on that K-1 income. All right, Peter, is there an issue with forgiveness if you hired new employees to assist you during COVID?
No.
Like an assistant with administration or marketing or that kind of thing?
No, I think look, the policy here is to get people employed. So if you need to hire new folks, go for it. That's no problem.
And we've encouraged people to hire their family members if they want to, things like that. There's nothing that says you can't do that. And that kind of gets you around, not gets you around. That is that's a better way, strategic way of looking at that limitation on your owner compensation, your owner employee compensation. Your compensation might be limited, but you might be able to hire someone to be your bookkeeper. That's your son or your spouse. And their income can go the full limit there. Will S Corp owners have their forgivable compensation limited to 850 seconds of 2019 if they used April 1st to March 31st compensation for the loan calculation? Or can they use 850 seconds of so essentially the question is, if you use a rolling calculator, are you still going to be limited to 850 seconds of 2019 income? And I haven't seen anything on that, have you?
No, I haven't.
So my guess is it's not going to work out because there's not going to be an exception unless they start carving out an exception. But the way they're telling you to calculate it now is to use that 2019 income. All right, Peter, one full-time employee got a small loan. Does employer have to use the entire loan in the 8-week period? If so, employer will need to increase the salary as employer does not have an office with rent, utilities, or other expenses.
I mean, potentially, or you are in a situation where you have a 1% note on the amount that you have been capped at. But that's going to be a common situation for self-employed folks, especially who are working out of their home primarily.
Or their sheds.
Their sheds, as the SBA identified in previous guidance. But yeah, I mean, so look, through your application process and through the promissory note that you signed, there's language in there that says, I intend to maximize my loan forgiveness, to make sure I'm paying 75% toward payroll cost and no more than 25% toward non-payroll cost. And, it's not clear exactly what the consequence of not doing that is, but it's, other than, well, you have a note now and a 1% loan. But, how you choose to deal with it from a business owner's perspective is just that.
And we haven't talked about it during this presentation. There's nothing that says that you do all this and then your business goes out of business, that is a problem. So something else to kind of think about, especially if you're an S corporation, meaning like the tax would be, well, either way. So if you do all of this and you've hired your family and you've done all these things to kind of keep the ongoing operations, and at the end of the day, it didn't work out, there's no harm here that people are seeing, as far as, there's no personal guarantee on the loan. So just kind of something to keep in mind, that having that loan out there isn't going to, I guess, harm you, if that makes sense.
One important point, and I'm sure you meant this too, but if you're hiring family members or related party or something, we're not suggesting that you just put them on payroll and they not do anything. This is a situation.
No. They can't sit and watch Bravo. No, right. They have to actually do work. And I would even go a step further and say they should remain employed once the pandemic is over, if possible, through operations. A lot of my clients have have their spouses help out anyway, and they kind of look at it as like joint income. So this is just a way of kind of recapturing that joint income as far as, you know, your spouse is still your bookkeeper, hasn't changed anything. You just weren't paying them a wage before. Definitely don't just write them a check, please. Okay, prior to the pandemic, I had one full-time employee on salary and 2 part-time employees that were hourly, 20 hours or less per week, and it varied. Before we knew about the PPP, I laid one of the 2 part-time employees off, and it's my understanding she's now getting unemployment. The other part-time employee then picked up more hours. Therefore, the total number of hours worked by employees is actually more than before overall, just fewer employees doing said hours. Will this make a difference in the forgiveness? Does it matter who works the hours?
No.
So your FTE number is based, so again, like if you look at that simplified method, you had 2 part-time employees, let's say they were both 0.5, you let one go, you increase the other's hours to 1, so now you're at 1. So you're fine. If owner employees and S Corp cannot be counted as an FTE in counting the number of employees, are they also excluded from the FTE count in the reference period?
They have to be, otherwise it would be nonsensical. But good question.
And they haven't specifically said, but we believe so.
Yeah. Well, and it's interesting. I mean, on these exceptions, again, the written offer to reemploy is rejected, fire for cause, voluntary resignation, or a request for a reduction. Those folks stay in the reference period comp, and then you don't move it at all for when you're doing the covered period comp.
All right. Is it necessary to deposit and or disperse the PPP loan from a separate bank account in order to prove use of funds? I really like this. Not everyone does. In the beginning, we weren't really sure how the auditing process was going to work. We knew there were going to be a lot of audits. We weren't sure how the whole thing was going to go down. Upon reflection, if you don't want to do that, you're not required to. I've recommended my clients to do it because I think it make sure things are easy. But money is fungible. You're moving it around. If you have a lot of employees that are over $100,000, it's going to be tedious to kind of transfer money back and forth because you're going to have to credit yourself the employer portion of the payroll tax, the payroll of over $100,000. So it's your choice. I think it depends on your business model, and I still don't think it's bad advice. It just might make things more complicated for you.
The only thing I'll say is in the application that came out, it talks about, well, what are the kind of documents that you're going to be required to turn over, one of which is referencing bank statements. And having a separate account, like a reimbursement account for PPP, you're going to show that money going into hitting your operating account. But as a standalone document, that doesn't show what it was paid for. It just shows that you move money from one account to the other. So I think you're still going to be in a situation where you're turning in bank statements for your ops account. And yeah, if you can tie it back from another account to show that those funds were segregated, you're being reimbursed, there's value there. But I don't think that you avoid turning over, your other statements.
Okay, next question is exactly what counts as pay, and it's cash. Cash is what's pay. Other is non-cash compensation, and that is not considered, a payroll cost. So next question: if the employer is currently looking to hire a new employee, can you apply the PPP funds to a new employee, or is it strictly for the existing employees which were accounted for the initial application? We've said that a couple of times now. You can go ahead and hire, and that's a great way to use those funds if you want to. Just remember that the employer portion is not going to be forgivable, and there might be some negative tax treatment later on down the road. All right, Peter. Do S Corp limitations only apply to distributions or S Corp owners who get a legit paycheck allowed to take and have forgiven up to that 850 seconds or 15K figure.
Yeah, distributions past their income does not come into play here, especially for this S Corp owner, because that past their income doesn't have self-employment tax levied on it. So that's the big distinction between an S Corp owner and a partner who's receiving guaranteed payments or past their income.
And again, it's the 850 seconds of the 2019 income. I'm sure that's what you're thinking, but just to make sure it's clear that if you had a really good January and February and you think that you would have had more money this year than last year, you're not able to change what you made, last year as far as what's forgivable through the program. All right. Suppose part-time employees historically have had their monthly hours varied. Do you have to pay all part-time employees a certain minimum? You want to take this one?
Yeah. So it's a per employee. I guess I think you're maybe getting at the 25% wage reduction, or
I think they mean the FTE. That's my guess. Anyway, do you have to have all part-time employees a certain minimum as far as hours, but maybe not. Maybe just a quick explanation.
It's a weekly average is what you're doing for the FTE. So you're figuring out what their weekly average is during the reference period and during the covered period. So no, there's no set requirement. And remember that you can use 0.5 in a simplified method, and that may make it a little bit easier. If you're talking about wages, they're basically comparing reference period to covered period, and it's looking at what is their average hourly wage, or if they're not hourly, what's their annualized salary, and comparing those two. And as long as it's not more than a 25% reduction, then you've met your burden.
All right. The next question talks about page 20 of our slides. Can they give the citation of the slide for new guidance, and what do they mean by their slide? Okay, so yeah, if you email me offline, I can send you the new guidance. It was issued on May 22nd, again, the Friday before Memorial Day for whatever reason, from SBA.
And just
what do we mean?
Everyone knows the universe of what's out here, and what we're relying on is they've come out with interim final rules. I think this one may be like the 7th or 8th version. Some have been direct.
It's a lot.
I mean, there's also they're up to 48 or
7 FAQs or something. Yeah,
FAQs that are posted on coming out of Treasury. I mean, so that's the universe of things that we've been looking at. There was a couple of early on, guidance memos that were published, but that's what we're looking at. We can provide that information, or it's available on the SBA's website.
So what we meant by there's retirement contributions for all employees are not qualified. It doesn't say if you're an owner, you can't contribute to your own plan. It doesn't say, 850 seconds of 2019 income or less than, it doesn't talk about anything as far as what you gave in the past and having to mimic that. So I was just really surprised by that. So I got excited about it, saying that there is no qualifications on these retirement plans. You could start a retirement plan. Say, hey guys, I want to do a SEP, and this is what we're going to do, and talk to your accountant, set it up, and you could use this money for it. I mean, it's surprising to me that there aren't any strings regarding retirement. And then what we meant by the hazard of bonus pay for employees earning less than $100,000 annually is that if you've got extra money and you want to bonus out your employees, I have a client who wants to do Christmas in July. It doesn't seem like there's any reason not to do that if you want to.
But that was definitely something that we were pumping the brakes on early on, is, non-discretionary bonuses, and would that be okay? I think we were, always a little bit more comfortable with the hazard pay, being able to articulate, why an employee had additional expenses, or you was appropriate to pay them for what's going on. But seeing clear as day in the regulations that came out on Friday about the bonuses was
Right.
surprising, but great.
Yeah. Other CPAs who are less aggressive than Peter and I were commenting last week saying that, you shouldn't bonus out your people, and SBA disagreed. So that worked out. All right, Peter. Grant money is deducted from PPP loan forgiveness off the bat. Does this grant money still need to be used for non-payroll costs?
Yes. As far as I understand, with respect to EIDL, the overarching rule is you use that money for something different than payroll, because PPP is meant for payroll. And Rebecca, we didn't really get into this, but I think there was a lot of commentators hoping to relax this 75% rule, or
absolutely,
at least explain it. And I don't know that they've done that.
And they did not. We still have our takeaway, which we probably should have gone into. I apologize for that. But so 75, it says that 75% of payroll costs, you have to hit 75% in order for your loan to be forgiven. And then you can use 25% on non-payroll items. The way we're interpreting that is, of your forgivable amount, if you're going to tamp down forgiveness if you can't hit that 75% threshold. So if you are at 70% of your loan amount, and that is payroll costs, you can't then use 30% for rent. However, it's also not a cliff. So you're just going to reduce your overall forgiveness by 5%. It's not going to reduce it to zero. That's at least our take as of right now. We hope that they're going to explain it better.
So the only thing I'll say is the instructions refer back to the very first IFR that came out, and that IFR uses the word threshold. And so people who have been saying maybe this is a cliff, I think there is at least language in there to rely on. But operationally, the way Rebecca described it is you just wouldn't ask for as much forgiveness on it. And I think that'll
just take some of it as a loan and it should be fine.
Yeah. But it's interesting. It's still an open issue, I think.
Yeah. And you'd think that the guidance that they issued would have actually gone through, because some of these examples are pretty detailed. It would have been very easy for them to kind of explain this a little bit more. There's also been a lot of theories going around as far as well, maybe they'll extend these to 12 weeks because 8 weeks really isn't practical, especially with 2.5 times. And maybe instead of 75%, it'll be 50% because some people have really low payroll but high rent and things like that. No, they didn't do any of that. They haven't changed anything. And we're almost at 8 weeks from when the first people got their money. So I don't think that's changing. As much as, AICPA has asked for it and other industries have asked for it. I think ABA has asked for it as well. Kind of going through and saying okay, this is impractical for a restaurant that isn't going to be able to open until September. Why in the world do they have to use this money right now? What if we could think of a better way to kind of stretch this out? And they have not done anything different. So that's until something new comes out, that's what I would expect it to be. All right, last question. So this is regarding the part-time employee question before. I guess if their hours had varied, you have to pay all part-time employees a certain minimum is the question before. So this is kind of a follow-up. So part-time employees question I asked earlier, some choose how much they want to work. Some of them have gone months without working, but then would return. For example, let's say John earned $30 in January, $400 in February, and decided to not work in March. Do I still have to pay John a minimum to still qualify for that forgiveness? Yes, you would have to do an average, but you can't have their overall compensation go below more than 25% of what they earned the previous year.
Yeah, I would agree. I think you as an employer should really push the issue too, because to the extent you need to rely on some of the exceptions for the FTE or wage reduction things, again, just written offer rejected, fired for cause, I'd be looking more at voluntary resignation or request for hours reduction in those situations. But it's very clear you need to document it. And at some point you may be in a situation where you need to establish that they've set these hours, and you don't want to get into a situation of a, he said, she said.
And if we're talking about these types of, got a new one, exciting. If we're talking about this low dollar amount, it may be that it's better to take it as a loan rather than, if you're not operational. I mean, I guess that it really matters on what your business model is and whether you're operational or not. If you're not operational, it may be better to take it as a 1% loan, and pay your more permanent people, in July, than to, thread the needle with these part-time employees who it just may not be worth it for the forgiveness aspect of it. So last question, are auto lease included for lease payments? Yes, and gas for utility. So how exciting. You can't drive anywhere, but now you can take gas. So I guess they realize you can't go anywhere. And so it's going to be a de minimis as far as who's going to get to qualify for that. So do you have any other takeaways, Peter, before we wrap it up?
No, I think we've hit on all the big points since the last webinar we did. So no, I think we're good.
All right, so thanks so much for joining us again. Peter and I are tax attorneys. That's what we typically do. We do tax controversy. So right now we're focusing on PPP just because a lot of our clients are small businesses and this is something that is relevant to them. But in general, we typically deal with people with compliance issues, whether it's through an audit or they have a large payroll tax liability or things like that. And we're happy to answer questions about anything tax or PPP or anything else offline. So thanks so much.
Thank you.
All right. Thank you very much. That concludes our webinar for today. Thank you very much to Rebecca and Peter. And if you have any feedback or any ideas for any future webinars, please email me. And I will be also sending out a survey briefly after this, where you can also include any topics, and please provide us feedback to our presenters for today. Thank you very much and have a great afternoon.
Thank you.